In a fast-evolving global economy where sustainability, innovation, and smart finance define the future, staying ahead means staying informed. This is Business Now, proudly brought to you by Absa Bank Uganda, your partner for growth. I'm Malcolm Sime, and tonight we explore the intersection of profit and responsibility in our CEO segment. We also speak to Roofings Group's corporate affairs team on how industry can grow without compromising the environment. Then in Agric Now, we are on the ground with JBK Training Farms, tackling the coffee twig borer menace and learning the best timing and method for fertilizer application to boost yields. In Tech Now, we will decode the future of finance with the CFA Institute digital lead explaining tokenization and what token assets mean for investors, capital markets, and digital economies. And in financial markets, the Bank of Uganda is set to roll out a 25-year treasury bond in August. We break down what this means to long-term investment and government financing. All this in just over 20 minutes. Expert voices and the numbers that matter.
So once we are harvesting that, or we are arresting the pest, we bring our cutters and chop off all these affected branches.
Everything we use as an input that has a residue or what would have been called a waste, we recycle.
This is a very significant strategic move. So for me, I also read that government is looking for a clear, strategic, market-oriented funding strategy.
Let's take a look at some of the headline-making business stories. Global trade disruption from U.S. tariffs, President Trump's broad tax measures, raising average U.S. import duties from about 2% to nearly 15%, continue to reshape global trade. Companies like Nikkei, HP, and Conagra are redirecting supply chains to places like Vietnam, Thailand, and Mexico to counter rising costs and avoid U.S. duties. Now, this is why I think this matters. It dampens U.S. manufacturing investment and employment. It also accelerates the formation of new non-U.S. trade alliances, especially across Asia and Europe, and African exporters, notably in steel and fertilizer. Momentum for Ugandan and Zambian currencies on African traders expect the Ugandan shilling to appreciate modestly next week, aided by soft imported demand for dollars. Meanwhile, Zambia's kwacha continues its rebound thanks to mining, especially revenue inflows. Why it matters? A farmer shilling eases import costs and supports inflation management in our country, Uganda. Our analysts also say strengthening in regional currencies could attract increased foreign investment into African markets. Let's talk Umeme now, because the Power Farm holds hybrid AGM announces key resolutions. Umeme Limited has announced the outcomes of the annual general meeting held on Friday, the 18th July 2025. And while you were aware, in a hybrid format, shareholders adopted the company's audited financial statements for the year ending 31st December 2024 and endorsed key decisions. And here they are, including re-election of the non-executive directors Stephen Emasu and Ricardo Ridolfi. Notably, the company opted not to declare a final dividend for the year 2024 financial year. Additionally, Ernst & Young were reappointed as the company's external auditors for the year 2025. This is Business Now. We begin tonight's show at the heart of Uganda's nascent industrial development. As environmental concerns rise, manufacturers are under pressure to align with green standards. In our CEO segment, I take a tour of Roofings Group's Green Industrial Park initiative in Lubowa with Corporate Affairs Manager Stuart Mwesigwa to understand how one of Uganda's largest manufacturers is balancing productivity with environmental sustainability.
The Kampala Industrial and Business Park, which is our newest extension but a state-of-the-art plant. Yeah, we have a deliberate agenda to ethically operate in the way we do our routine operations during our manufacturing processes, making sure that we do not harm the environment, be it emitting toxic emissions or pollution of the air. We don't do that. You can see from here the whole place is very green. You don't see any smoke being emitted in the air. We have invested in technology. One, the equipment we use, which is most modern technology equipment. Also, we collect what would have been the fumes that would have polluted the environment. We collect them and condense them into something that turns into ash and then dispose that professionally. Secondly, you must have already visited our seedling germination area. We have a dedicated department specifically to look into that. So we took the initiative in the industrial park which I'm talking about. We are here in Lubowa, but the gazetted industrial park is Namamve, which is in Kampala, where so many other entities that are doing manufacturing in the different cultures, as you'd say, steel, beverages, tiles, etc. So we spearheaded that action where we committed to give out 2 million trees specifically for regreening the park. However, our purpose or aim is to have given out about 30 million trees by 2030. We are working so hard to ensure that we do that. What I can tell you is, in Roofings group, there is no word called waste. Everything we use as an input that has a residue or what would have been called a waste, we recycle.
So last year in July, UMA launched the Green Industry Agenda, which is a strategy, a 10-year strategy that is supposed to guide activities and programs that are supposed to transform the industrial sector. And one thing, the agenda is on 6 pillars, but 3 of them are on waste management, energy transition, and environmental conservation. Now, pillar 1, which mainly is on environmental conservation, is the one that tries to ensure that the process of industrialization doesn't have an effect on the trees. So one thing that happens usually when they're setting up an industrial park is they'll clear thousands of acres of forests or of land to ensure that these industrial parks can exist. The very first program is on greening of industrial parks. That is, we transform these initially cleared parks into areas where we can actually plant trees. So we've taken this initiative on from, of course, Roofings Group, that is giving out trees to different industries that wish to plant trees within these parks. So that is particularly what we're doing. That we are going to go to these different industrial parks, and then we ensure that factories that are located within are planting trees to restore and also exist within that particular ecosystem.
And to the farms now, where the coffee twig borer continues to threaten Uganda's top cash crop. But one farmer is turning the tide. In this edition of Agriculture Now, we bring you the story of Jose Kuta, a biomedical scientist turned coffee farmer at JBK Farms, who shares practical strategies for controlling the pests and getting fertilizer application right for better yields.
Farmers have challenges with pests, but the most invasive pest is called the coffee twig borer. And how do we detect that a coffee is being affected? Once that twig has invaded your plantation, you will start seeing your leaves withering in this format. So once we are harvesting that, or we are arresting the pest, we bring our cutters and chop off all these affected branches and collect them in a polythene, because they have to be burnt. If you spread them around the plantation, it's like you are distributing the eggs. But the pesticides are quite expensive, and the performance usually challenges us when it comes to finance. So we devised, this is called a twig borer trap. So in here, we have a volume of water which we fill up with the ethanol, 96%. So now when this pest comes in to take in the alcohol, it gets in there. Because of its volume, it takes a very minor scent, gets drunk and drops into the water. So once it is in the water, it drowns. Within 30 minutes, the boiler is gone. We apply Yala Mira Java together with Yala Nitraba mixed in a ratio of 1 to 1, 1 bag to 1 bag. And a tree of this size, we make sure that we feed it with 350 grams per rainy season. However, to avoid leaching and losing the fertilizers, we make sure we split the 350 grams for each rainy season. So rainy season of 3 months, we make sure that the first application comes at the onset of rains, the second application comes after a month. Then we switch to Yala Power Boost during the drought season, which we are almost approaching. Once the tree production reduces to our expected numbers in terms of kgs, we go to a stage of stamping. Stamping is when we eliminate trees that have gone into age of when it comes to production. Once those trees have been eliminated, these are the stumps. As you see, we have chopped off the main trees. Then we allow a new shoot of suckers. Immediately these suckers form, we start the application of Yala Bera Sulfan by applying in a ring mode of 400 grams. We continue in this process until this coffee reaches a stage of flowering. So the farmer has to continue watching. As you approach the flowering stage, then we switch to Yala Mira Java as it is indicated on the other side, together with the nitrab.
In the digital space, new financial models are reshaping how we understand value and ownership. In today's Take Now segment, we feature insights from Olivia Fines, Head of Advocacy and Policy Research at the CFA Institute on Token Assets, and the growing conversation around tokenization. What does it mean for capital markets in Uganda, and how close is it to our world in this digital development?
The development of digital finance over the last 5 years or so has taken the finance industry and the regulatory community by storm, not to mention as well governments and treasury departments all over the world who are gradually coming to terms with the impact this new fintech industry can mean for financial markets and economic growth. From our perspective at CFA Institute, we call this phenomenon the digital transformation of financial services, which has been a rather chaotic development, a grassroots process rather than a top-down evolution led by incumbent institutions. Digital finance is a complex ecosystem that mixes a number of different concepts, instruments, and processes, from cryptocurrencies and stablecoins to smart contracts, NFTs, non-fungible tokens, and more recently, the rise of tokenization of real economy assets. The most recent and probably most interesting variation of digital finance development has been the concept of tokenization. Tokenization is a derivative of the concept of asset fractionalization using a digital process. Tokenization effectively results in a digital representation of traditional assets using distributed ledger technology. Tokens both define assets and specify what can be done with them. The records of the underlying assets are integrated with the rules and the logic governing the transfer process of the assets. We have just released a 2-part series on the topic. Part 1 is an introduction to the process of tokenization and presents a practice analysis based on a series of case studies presenting a variety of assets and approaches. Part 2 is an analysis of policy and regulatory implications of this development. When considering the world of investment and fund management, tokenization promises inherently to transform what is a linear setup across the value chain of intermediaries to a decentralized operational model using a distributed ledger. The main potential benefits of tokenization we observed concerned efficiency gains in clearing and settlement processes, programmability and automation of tasks related to transparency, risk and compliance, and fractionalization and market access to non-traditional asset classes. However, there are also important limitations to consider. First off, security risks related to fraud and limited investor education. Second, regulatory challenges in relation to a clear lack of international coordination. Third, market structure not fully operational, causing fragmentation and poor liquidity. Fourth, access to private markets and illiquid strategy is not obvious from a fiduciary standpoint. In July 2025, the market for tokenized assets represented around $24 billion in value, half of this for private credit assets, while there were the equivalent of $240 billion in circulation in the form of stablecoins. As a comparison, the global value in dollars of all cryptocurrencies has reached over $3 trillion that same month.
And in financial markets, Uganda is preparing to launch its first ever 25-year treasury bond this August. Is this a sign of deeper market development and longer-term financing ambition? We get expert analysis from Stephen Kaboyo, Managing Director at Alpha Capital, and our resident financial analyst on what this bond means for investors, markets, and everyday Ugandans who fear they may be crowded out of borrowing in banks.
This conversation, I think it comes in timely, given that the bond calendar issue has just come out and indicates that in a month's time, government will issue the maiden 25-year bond in the local market. It is a very strategic move, in my view. But before we get into the finer details of it, we must look back because, quite frankly, Uganda has taken very significant steps in terms of making progress and developing the bond market. When you look at the government bond dynamics, let's call it the government securities market, the average time to maturity is quite short. 5.5 to 6 years is such a short time. Average time to maturity means that's the weighted average time for all the financial assets that you have or all the bonds that you have to mature at one time. It's very short. That leads into what I would call a rollover risk. When you have the ATM longer, perhaps to 10 years, it reduces the pressure for government to be able to roll over. So that rollover risk is mitigated, which means that even the cost of debt service comes down. So there is less pressure on government finances to be able to service debt and issue new debt. This is a very significant strategic move. So for me, I also read that government is looking for a clear, strategic, market-oriented funding strategy. There will never be enough taxes. Government must be able to look for alternative ways of raising financing. And in the recent auctions, if you look at the trend, government has been less sensitive to prices, meaning that they would want to create a very attractive yield curve that can attract longer and interested institutional investors, not only here, pension funds or insurance companies and unit trusts, but also offshore. When you look at the investment profile, today international investors hold close to about 9.5% of the total government bonds. So that's huge. That's an indicator that there is There is attractiveness, there is interest, there is renewed interest from offshore investors to come and participate, given the economic fundamentals, stable as they are. So that makes Uganda a very attractive investment decision for offshore investors. Yeah, multiple risks. One is the economy stable? Is it likely to hold where it is? Two is your investment outlook, policy stance. Are your policies stable? For example, what the investors look for is an open capital account where the money can come in and go out. There are restrictions around that, because that's very key in terms of providing the necessary confidence for an offshore investor to come. So as government brings this on board, I'm sure that one objective is to be able to raise long-term financing for long-term projects.
And that's all for Business Now this week. And thank you for watching. You can follow me, Malcolm Sime, on X, formerly Twitter, for more business insights and behind the scenes and updates. So to rewatch tonight's show, you can head over to NTV Uganda YouTube channel. And don't forget to like, subscribe, and turn on notifications so you never miss any episode. You can also catch the repeat broadcast this Friday afternoon right here on NTV Uganda. And until then, thank you very much. Stay informed and stay ahead.